Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for March 28, 2021. I hope you guys and gals are having a great weekend. We have an exciting week this next week. It's a holiday week. It's going to be a shortened week. Don't forget about that. And that means with non-farm payroll on Friday, it could be a very volatile and exciting week. But before we get into that, let me just go ahead and mention a few things. A little housekeeping. If you haven't tried out ForexAnalytix, you should do so. But before you even do that, if you're watching us on YouTube and you watch us every single week and you love these videos and you love how we produce them, give us a thumbs up, give us a like, give us a share. It makes me feel great. It makes our team feel great, and it really helps us on our YouTube algorithms too. So just give us a thumbs up, comment on the video. You know, if you have some input and you're like, oh man, I think that euro is going a lot higher than what Blake thinks. Yeah, put it in the comments. We'd love to hear from you. I'll try to respond to you if I can. But I just want to say, give us a thumbs up and share this video if you see us on LinkedIn or on social media like on Twitter or something. I appreciate that, and so does our team. We really do. Also, if you haven't tried us out, if you haven't tried out ForexAnalytix, it's only $1 for 10 days. So try it out. You could take the light version at the end of your 10 days, and it's $20 a month. But that gives you access to all of our webinars that we do. All of the webinars that are private for our customers, you get them all. All right. But if you decide to use the premium version and you want the advanced analysis, you want to be in the live chat rooms where I'm at all day long and the rest of our team, it's only $120 a month. But guess what? When you try it out, it's only $1 for 10 days and you get the mobile app with both versions. So $1. Try it out. Come hang out with us and our team in the chat rooms. We'd love to see you there. All right, let's talk about this next week. And I'm going to be doing analysis, by the way, on you'll see like analysis here on ForexAnalytix, and this is from not just myself but the rest of the team. And you can see that the dollar index hasn't been updated yet, and it'll be updated by this afternoon or by this evening by our team. But you know, you can go into the harmonic analysis, some of the advanced analysis, or like the Elliott wave analysis, and see where Greg Horvat thinks that the dollar index is going before we turn. Or you can even go into live charts if you want and do that as well. I'm actually going to be using our template here because this is, our team shares this, so you know when you see analysis pop up on ForexAnalytix, it might be mine, it might be somebody else from the team, but it all looks pretty close to the same. That's because we share templates. So anyway, I'm going to draw here really quick, and I want to talk about the dollar index and where it's going to go. But before I do that, I should talk about the move that we saw very late in the day on Friday. Look at this hourly chart and look at what happened Friday afternoon. Do you know what that is at the very end of the day? Look at the Dow, the Nasdaq, or that was the Nasdaq. Here's the Dow. There's the Dow. Here's the S&P. There's some speculation that it was a hedge fund getting squeezed out on margin called, basically, on Friday. You imagine that Friday at the end of the day, and a huge hedge fund having probably one of the worst days of the year, with a massive short squeeze that actually produces a big move like that at the end of the week. That's seems like a likely excuse. It doesn't mean it is, but what that did do to the stock market is it put the S&P near all-time highs. So as a result, I wouldn't be surprised if the S&P, makes a run for 4,000, maybe even higher, going into early next week. Now, one of the things that if we make a move towards let's say the 40-30 level, which is the 127% extension of this last move lower, this one right here, okay, which again wouldn't surprise me. We finally hit the 4,000 level, market's happy, options traders are happy, all those calls pay out, whatever. Technically we hit the top of our megaphone pattern or get close. It wouldn't surprise me. So what would that do to the dollar? Well, the dollar, let's not ignore the fact that the dollar is in a bullish bounce, right? Here's the dollar index, and this is the bull flag that we've been, focused on with our, and if you follow along during the F.A.C.E webinars, the free webinars, you already know my take on the dollar, okay? The reason why the dollar isn't higher right now is because the stock market's still holding up pretty well. Now, if you don't, let me stop here for a second. If you don't know how to access our webinars, there's a link in the description of this video that you're watching if you're watching us on YouTube. Remember, when you're watching us on YouTube, what do you got to do? Give us a thumbs up. That'd be awesome. Okay, that was a little reminder. Wink, wink. Oh, you can't see me winking, but I am winking. Wink, wink. Hey, give us a thumbs up. Thank you. But if you want to know how to find our videos, if you go over to where it says webinars, there's and that's on ForexAnalytix.com. Register now for the F.A.C.E webinar. It's right here. Okay, just fill that out. You'll get a notification from Zoom. By the way, we've been using Zoom for years, pre-pandemic. So we were Zoom users before Zoom was even cool. So just so you guys know. But anyway, no, seriously, jokes aside, that's how you'll get notifications of the webinars that we do every single day. Okay. Or every single trading day. But you'll know my analysis here with the dollar index. The dollar index closed above the 200-day moving average. And while, dips, maybe we might find a dip below 92.50, but those dips are probably going to be very well supported. And ultimately, I think the dollar index is moving to 94.50. Do I think the dollar index is in a downtrend? Yeah, I do. I actually do. I think the dollar by the end of the year is going to be lower than where we're at right now. But just because I think it's going to be lower later this year doesn't mean we can't go higher before we move lower, because nothing moves up or down in a straight line. So I do think that the dollar index is going to be a sell on rallies as we approach the 94 or 94.50 level. So if you translate that into what that means with the euro dollar, that means the euro dollar is probably going towards 116 or maybe even lower. And it makes sense. Do you know why it makes sense? Because the whole world, every single bank analysis at the end of 2020 suggested that the euro is going to 130 or 128 or 140 or 135, whatever their analysis was. Universally, every bank at the end of 2020 right here said that the euro is going over here. I'm a little exaggerated right now, but you get what I'm saying. And look where we're at now. That's because when the whole boat is, on one side of the ship, the ship will capsize, and that's what happened. Now, if you think about that process and that psychology, right? Everybody is like, and you look at the CFTC data. It's starting to moderate, but it was the most aggressive euro position in, how many years? Or most aggressive dollar short position in how many years? Yeah, it's starting to flop a little bit, but it's all right. We probably have further to go. So if the euro drops down through this support, this long-term support here at 116, I think if it reaches for 115 to 116, that's the place where you want to be long going into the end of the year. And I'm just trying to give you like a kind of a more of a trend direction. Does that mean that the euro is going to go straight down from here? No, probably not. I'm sure that the euro this week, I'm thinking it might be a great selling opportunity. Now I'm taking you into more intraday 4-hour charts. I think it's going to be a great selling opportunity as we approach, 118.75. Let's just hope we get there so we all can sell some, right? Now, there's a chart I really want to talk about going into this next week. Okay, because you could do the same analysis, and some of you guys, well, a lot of for the hundreds and hundreds of people who listen to us every day live. You guys already know I've been monitoring this head and shoulder pattern. Look, I think the Aussie's holding the neckline. We might bounce towards 77 cents before rolling over again. I think eventually we're going to be moving towards 74 to 75 cents over the course of the next couple months. Okay, but it's going to give you a great buying opportunity lower if it does happen. But the chart I really want to pay attention to with you guys going into the end of the week okay? And before I do that, let me stop here and say this. If you haven't given us a thumbs up on YouTube, please do. No, I was joking about that, but whatever. Wink, wink. No, I'm just joking. Now I'm getting a little punchy. No, what I really wanted to say is next week, one thing that I wanted you guys to know, and if you can follow along on your calendars, either at home. This is investing.com calendar that's attached to ForexAnalytix. You know, look wherever you're going to look. But next week we do have the jobs report. So we have the jobs report actually on Friday. But you know what Friday is? It's Good Friday. Do you know what that means? It's a bank holiday. You know why? You know why that's you can see all the banks right here. You know why that's a big deal? Because liquidity is going to be really shoddy. It's going to be horrible. And so any outsized, beat or miss on non-farm payroll could produce a pretty big move in the dollar at the end of the week. So that's something that we have to think about as we're looking through all these charts. Now, before I go back into the chart that I really want you guys all to see is, next week there are other pieces of data. Like we have Canadian GDP on Wednesday. We have Canadian GDP. We have on Tuesday we have the UK final GDP. Remember, we're going to have ISM services data this week. Yeah, it's a shortened week, so we'll get the manufacturing data for ISM this week. We'll get the services data early next week, I believe. So there are things that can move the market. There's economic data. Remember, data matters now. Data didn't matter last year. Okay. And now that we've gotten, $1.9 trillion worth of stimulus out of the way, and most of that money has hit bank accounts of the American people over the last, week or two. And I have to say that we've had very limited upside in Bitcoin, which should, you guys should be thinking about that just as a whole when you're dealing with Bitcoin. But that's a different conversation for our live webinar, so come back and see me there. The one thing that I do want to talk about is I want to talk about the dollar Canadian, because the canal, the Suez Canal, did I say that correctly? I always mispronounce it. Suez Canal. If you look at the ship that's blocking it, it's got 18,000 containers. 18,000 of those big metal containers. It's crazy. You should see pictures. If you haven't Googled it, you just check it out. It's pretty wild. But one of the reasons why crude oil is where it's at, above 60, is because of the canal blockage. Now, that ship's going to be loosened up, and it's going to move. Whether it's early this week, maybe it'll be later today or tonight. They might use explosives. They might dig out more of the canal, finally get it loosened, and once it unjars, I think the crude's probably going to come down. Well, I think one of the reasons why we're not trading at 55 right now, we're trading at 60, is because of that. Now, if we do slump towards 55, and if we move down towards like 50 in the high 40s, that's where I think crude is actually going after we broke this ascending trend line that you see here on the daily chart. Then what happens with the dollar Canadian? And that's this is a currency pair that is pretty influenced by the price of crude. Look, the dollar Canadian in 1 year, and we're talking from March of 2020 to we're currently March of 2021, we've dropped 2,200 pips. We've gone from 146 to 124. We're currently trading about 125.70, 126. If we break above this 50-day moving average, which comes in right around 126.50 roughly, I think there's a good shot that the dollar Canadian makes a move for 130 again, or maybe even the 200-day moving average, which is slightly above. It's not going to happen in one day, and I think that's not an abnormal ask for a currency pair that has dropped 2,200 pips in a year, knowing the fact that we're not going to go straight down in this overall downtrend. I believe that to rejoin the downtrend at some point, we're going to have a great opportunity, whether it's from 132, whether it's from 130, whether it's from 129. I think we're going to be able to be short at some point in the fairly near future, I think. So that's if crude oil starts to sell off and the dollar Canadian might rise. So I think that's something that we all should be paying attention to. So again, guys and gals, if you really enjoyed this video, if you enjoyed, maybe my humor, maybe my good looks, oh, you can't see me. Oh. Then you just have to guess. If you really appreciate this video, give us a thumbs up. I would appreciate it. My name is Blake Morrow with ForexAnalytix. Hope you guys have a great week, and I hope you have a great shortened trading week this week. And I'll talk to you tomorrow morning on the F.A.C.E webinar. Thanks, everyone. Bye-bye.